Good evening, everybody. Today's my topic is about capital market, like how companies pool up their resources in bulk. So, usually, capital market will be called as primary market. So, here, resources in the sense money resources, okay, that too in bulk, not for small scale businesses. I'm speaking about a big business, okay, some large scale businesses. So, usually, they won't invest from their pocket or from their own funds. So, let's dig this methods. Capital market refers to the market available to the company for raising the long term requirements of funds. So it is not meant for the short term benefits or short term fund requirements. It is about long term requirements, the capital market means. So whatever the market is available to the company for raising their funds for the purpose of long term requirements, that usually we call it as capital market or primary market. And then companies can raise their funds on regulatory framework of SEBI guidelines only, not as per their wish or in whichever way they want to get the funds. They can't go for that. So there is a systemized procedure as per the SEBI protocols only. They have to raise their funds. So there is a specific framework prepared by SEBI guidelines. Okay. So how they can raise their funds? By issuing their securities in the market, they can raise the funds. This is the first step. Okay. So what are those methods to issue their securities? So those are directly three methods. Companies raise funds in three methods. Those are, the number one is by public issue, the second thing is by rights issue, but it is not usually practically, nobody is actually not following it, not much. I mean, few people are managing, but it is only for public limited companies, not for everybody. That's what I mean here. And the third one is private placement of securities. So, what is public issue here? It indicates the scale of securities to the members of general public like us. Okay? And the second thing, as I mentioned, rights issues. These are the shares which are issued by the public limited company only, not any other company can do this. So they raise further capital by way of issuing additional shares. So that means already they should have some shares in their hand, already they should have issued. Okay. So by existing equity shareholders only, they have to do this job. So first in similar proportion, that too. Got it? So, a public limited company can only issue the rights issues. They raise further capital by way of issuing additional shares by existing equity shareholders. First, in similar proportion. Got it? Not by any other company. Only public limited companies can issue this. And private placement. So, as the name indicates, it is the private placement made by the company to a selected few investors only. So these shares will be issued to only few members. So they'll be having separate norms before getting qualified. So if members are eligible for that qualifications, then they will be able to utilize that privilege or to buy those securities. Okay, that's all for today. Thank you.